Alright, ladies and gentlemen, welcome to lecture 3. In this lecture, we're going to learn 7 good topics that can take you through to the next level, and that's from the introduction to airdrops, testnet, IEO, ICO, IDO, and INO, their standards and their differences. Note that I'm talking about the introduction, and also about DeFi, NFTs, and GameFi, NFT Marketplaces, the metaverse, DAOs and traditional organizations, how Web 3.0 will affect software industries in the future, use cases of blockchain technology, advantages and disadvantages. So please note that you are to do your own research, which is actually one of the key things to succeeding in anything you are learning. Do your own research, do your analysis, learn more, especially for the topics that might seem to interest you, including NFTs, DeFi, and DAOs, even the metaverse. So please do your own research, and it's gonna be a good day. Starting with lecture 3.1, introduction to airdrops, IEO, ICO, IDO, and INO. So a cryptocurrency airdrop is a Web3 marketing activity. It is a marketing activity. Please take note of that. It's a Web3 marketing activity performed by some Web3 startup to bootstrap their cryptocurrency community. The tokens are distributed to the wallets which fulfill certain conditions like completing simple tasks or holding or staking a certain amount of cryptocurrency. So when you are completing you're entering for an airdrop in a Web3 community, this mostly happen to startup communities. You have to complete simple tasks which they will assign to you, and that will help you to claim rewards based on the amount of tax or the value of tax that you completed for them or what they ask you to do. And some of these airdrop communities are actually wise, so they ask you to contribute to the ecosystem by holding a certain amount of tokens or by holding or staking a certain amount of cryptocurrency in order to qualify to receive the airdrop. So there is another form of airdrop that involves shares, which the amount you receive is determined by the amount you hold. It's called share drop mechanism that is being adopted by exchanges when they conduct IEOs. So you would receive the amount, the distribution that will come to you would be based on the amount of tokens that you have on your wallet. For example, if you are entering an airdrop on Atom ecosystem, the amount of airdrop that you are going to receive depends on the amount of Atom tokens that you have staked in your wallet. Same with Steam blockchain, and those are for decentralized platforms or blockchains. But for centralized exchanges like Binance, anytime they want to do IEO, even MEXC, Huobi Pro, KuCoin, you need to have their exchange token being held in your wallet or staked. Then they will take a snapshot at a certain point, and after that snapshot you receive the share drop. Like based on the amount of token that you had in your wallet during that time, you are going to receive a share of that cryptocurrency. So IEO, which I just mentioned, means initial exchange offering, and it started in 2019 and it's conducted by centralized exchanges. Note that centralized exchanges are different from decentralized exchanges. So IEO is a way for startup Web3 companies to raise capital by selling some of their cryptocurrencies to the customers of that exchange based on some certain conditions. The conditions, like I stated, holding a certain amount, taking a certain amount, or trading a certain volume of this or that. So ICOs are ways to raise funds for product and services in Web3. It is similar to IPOs, but IPOs has at least security to back it up. It can, ICO doesn't have any security to back up. The cryptocurrency fundraising activity that has a backing or security token to back it up is something we call security token offering. So we'll get down to that. Let's finish with the ICOs. ICOs can either be done with cryptocurrencies or USD. The coin issued during an ICO can have utility for software, service, or product. So ICOs do not seek public investments, and they are referred to as private sale. Some ICOs, not actually all of them, some ICOs do not seek public investment, and they are referred to as a private sale. So please take note of this, that some of them, some seek public investment, and they are referred to as a public sale. So the ones that do not seek public investment, which they have a certain group of investors buying, is referred to as private sale, where they will sell at a lower price. For example, that someone is supposed to list at the price of $1. They will, during their ICO, they are going to sell at a lower price, around a 0 point something dollar, so that the investors will make profit on launch. So mostly ICOs happens on the project website, although there are third-party websites now that can help ICO project to launch, but ICO project mostly happens on the project website. If you want to buy an ICO for a certain cryptocurrency project, you go to their website. Okay, this is an example of an ICO going on this website. Started from 26 October and is to end on 31st January. So what you have to do to join this is to connect your wallet, and when participating in ICOs or all these exchange platforms, please make sure you don't use the wallet that you use to do your savings. Create a separate wallet for this. The money you want to use in investing in ICO, transfer it to that, then you connect. Don't connect your main wallet to this to avoid the risks of losing your money in case this platform is get hacked or something happens to them. And these guys seem to be pretty cool. They have raised over 13.1 billion, oh sorry, 13.1 million US dollars so far out of their target of 25 million. Yeah, I think they are gone past half now. So people keeps on buying this, and when they launch, it's gonna be cool from my guess, with that amount of money they are trying to raise. So the ecosystem gives you an opportunity to invest in early startups and stand a chance to win profit, but that's not always been the case. A lot of ICO projects do not keep to their promises and they tend to fail, especially during the bearish market like this. So the next one here is IDO. IDO is very similar to ICO, and it's actually one thing that is tending to replace ICO now. It's quite popular in the market, and it's a crowdfunding technique that allows cryptocurrency projects to launch their native token or coin through decentralized exchange. Remember what I said decentralized exchange means? So it helps projects to launch their cryptocurrency directly via a decentralized exchange liquidity pool. So that helps you to launch into, for example, PancakeSwap, Uniswap. You do your IDO on those exchanges, you are able to launch directly into their liquidity pool, where the money that people use to buy your IDO will be used to provide liquidity, and you also provide a certain amount of your token to that exchange like PancakeSwap or Uniswap, so that swap can take place immediately after token public sale or IDO sales. So that's what it simply means. And there is a new one here with the advent of NFTs. It gets better to INO, and INO is an initial NFT offering. It is another way for crypto projects to raise funds by selling a set of their NFTs. So it is done through launch pads like NFTB and many other NFT launch platforms. So I mentioned STO when we're still talking about types of fundraising strategies in cryptocurrencies. STO involves providing a certain amount of tokens to back up the fact. For example, this is what I mean. I want to do an STO for Chaindustry token, where I intend to raise about 1 million US dollars. So in doing that, I'm to provide 10 or 20 Ethereum to a pool in such a way that when this money is raised and I'm not able to fulfill my promises, or I'm not able, the Ethereum which is in a pool which I backed inside an escrow platform is what is going to reimburse my investors. You get what I mean? In case I don't fulfill the terms and conditions. So this money is there to reimburse investors just in case the project do not fulfill what they promised to do. So STO is more like a more secured way to do ICOs, because ICOs was easy for project to launch anything into the ecosystem, and they scam people, take their money and run. So STO is not quite popular, and people are not really using it since IDO and INOs came out. The next topic here is about DeFi, CeFi, GameFi, and NFTs. When you think about DeFi, DeFi is a more decentralized bank. Let's call it that way. And CeFi is like the centralized bank which we use already. So DeFi simply means decentralized finance, and it is an instrument of Web3, financial instrument of Web3 that eliminates third parties and central authorities from slowing down financial transactions. DeFi uses open source distributed network, which is the blockchain technology, to transform traditional finance products to become more reliable and transparent. So savings, fixed deposits, loans, lending, all those activities that happens on centralized finance, which are slow, which are not trusted, like things that happen internally inside centralized finance, which are not transparent for all of us to see, now happens on DeFi, where you are able to loan a certain amount of money or cryptocurrency by just providing a certain collateral that is accepted in the open market, like Bitcoin, Ethereum. You provide a certain collateral and you're able to borrow some money. But if you don't want to borrow, you want to put into the pool, like you can stake your Bitcoin, you can stake your token, like for example, if Reef is doing DeFi project, you can stake your Reef DeFi, you can stake whatever you want to stake into the ecosystem, so that you get rewards for doing that. So Reef will reward you with their token for doing this, and you provide they help use your money to provide loans for people and make returns for doing that. They just operate the current centralized banking system on blockchain using smart contract protocol. So that is just the major difference. This infographic over here is going to help you see the major differences between CeFi and DeFi. So after doing that, we move over to GameFi. GameFi is just including financial incentives to playing video games. GameFi refers to financial inclusion of video gaming, while users are incentivized for playing video games. So incentivization comes into playing video games, and that makes it easy for users to gain money for their time. Initially in Web2 games, you can just play, example, a game like Temple Run, which is quite popular. You play and play and play. All you gain is those tokens. You don't get any rewards. You don't get any financial reward that you can convert into your bank account and spend. GameFi eliminates such structure and makes it easy for you to still gain those tokens, convert them to a certain cryptocurrency, which is quite valuable for you. And that cryptocurrency could be their in-game token, and those tokens can be used to purchase stuff at the mercenary and anything you want to do, upgrade your game, upgrade your guy, and whatever you want to do that used to happen in Web2 gaming. Financial inclusion now comes in with GameFi, and you play games for real and earn money. So there are a lot of DeFi games out there which would introduce in week 3. So NFTs means non-fungible tokens, and they are cryptographically secured with their history of ownership and current owners stored on the blockchain. NFTs represent certificate of ownership for virtual possessions. What that means, certificate of ownership for virtual possession, what that simply means is, if we have a desktop, because I'm using a desktop right now in an NFT ecosystem, the NFT which I own is quite unique. Uniqueness shows that no other person can own this particular desktop which I own right now on the blockchain, and the certificate of ownership belongs to me as an NFT. So if I no longer want to own this desktop, I can transfer to Sarah. If transferring my NFT to Sarah shows that I no longer own my NFT, and now Sarah owns it. So when I said here, it shows history of ownership. So there will be history on the blockchain that I own this, and I transfer the ownership to Sarah, and so on. Maybe the price can also be tracked, the price at which I transferred the ownership to Sarah. And this, when they say virtual position, this desktop that I'm talking about is a virtual position. Like, it's not real. I cannot take it out of the internet. I cannot take it out of the software. And the same thing happens with lands. We have lands in NFTs. We have a lot of things like games like Sandbox and stuff like that. You can buy lands in NFTs and more. We buildings, shops, rent, and all that. And some of this ecosystem, to make it quite cool, they back it up with real-time existing assets in the world. Like, there's some assets that are existing somewhere in the world, they back it up with that. So they don't just own it virtually, and it is virtually owned but backed up. For example, if I own a virtual PC, which is issued by Apple, and I use that virtual PC to do whatever I do on the internet, but that represents that PC which is over there at Apple headquarters. I'm using Apple as an example. So that means nobody's going to own that PC except me. And there could be some conditions that can make me claim the PC naturally, down here, and so on and so forth. So all these mechanisms in the ecosystem is what makes NFTs, DeFi, CeFi, NFTs, DeFi, and GameFi very cool. So popular NFTs include People NFT, which was selling for around over $60 million. CryptoPunks, MeBit, Blonex, NFT Top, NBA, yeah, I used to see this one a lot, NBA Top Shots, and many more. So this other infographic here is also going to help you learn more about NFTs, and you can also understand NFT to be a smart contract protocol with a suffix that has to do with 721. So moving over to the next topic. The next topic here is NFT Marketplace. An NFT marketplace is a platform for trading, as the name implies, platform for trading NFTs. Marketplace allow people to store, display, and auction their NFTs to other users in exchange for cryptocurrencies or fiat currencies. So depending on the NFT marketplace you are using, you can auction your cryptocurrency, you can buy, sell, blah blah blah, or your NFTs using cryptocurrencies. So with this, you are able to buy and sell your NFTs. You can buy from somebody, sell it to another user. You can buy low from this guy, sell it to somebody high. And you can also make loss trying to trade that. People flip NFTs and make profit. People also flip and make losses. This is business. So in NFTs, there is a word called minting. Minting refers to the process of creating new NFTs on a blockchain. When NFTs are minted, the data is recorded on a blockchain comprising of new NFTs in a new block that has been added to the blockchain. This comes with a fee known as gas fee in the form of crypto token that of the mainnet blockchain. For example, if you are minting an NFT on Ethereum blockchain, you are going to be charged a gas fee on Ethereum blockchain, and that gas fee is with Ether token. So, or if it is on BNB Binance Smart Chain, the gas fee is going to be in BNB token. So this infographic over here helps you to understand the process of selling your NFT or buying an NFT on an NFT marketplace. NFT marketplace workflow for sellers. So if you want to sell your NFT, you sign up, set up your wallet, do your creation, follow these steps from number 1 to 6, or from number 1 to 10, and then you'll be able to sell your cryptocurrency or your NFT. So the metaverse. Let's move on to the next topic. Please make sure you do research on all these topics that I'm talking about. If you want to do deep down research for all of them, it's gonna take us over 1 hour each for all these topics because it's very wide, and that's why I tell you to do your own research anytime on these theoretical topics. So a metaverse is a virtual world. That is just in simple terms. A metaverse is either a virtual or augmented reality, a augmented reality space in which users can interact with computer generated environments. They are not real environments, computer generated environments, and other users. People can live, shop, work, play games, and whatever they want to do inside the metaverse. So a sandbox, this is an example of a metaverse that lets users to play games and build virtual worlds with the option to monetize their experience. Experience, services, products for sale or trade. So sandbox allow users to own non-interchangeable in-game assets such as non-fungible tokens, NFTs, buy and sell real NFTs, real estate on sandbox. So this is the blockchain I was talking about, or this is the project I was talking about, which I bought my first land after playing a game on sandbox. So in 1992, a science fiction novel author Neil Stephenson coined the name metaverse. This was where the name was came out from in his hit novel, which is called Snow Crash. Now 30 years later, he's teaming up with another crypto OG, Peter Vesenes, to bring that NFT project that he was writing about, or the metaverse project he was writing about in his novel, to life. Accessing the metaverse is simple as putting on virtual reality headset. This is a virtual reality headset. something like Mark Zuckerberg is wearing right now. And if you look at this guy is playing a game. He's real life here, but he's busy. He's busy punching, shooting over here at I think he's shooting inside the metaverse. So with virtual reality, you are able to do stuff like this. Accessing the metaverse is simple. It's simple as putting on virtual reality headset and holding a set of controllers. While, yeah, let me show you that. It's simple as this. So you can just connect to this with your headset, your Oculus Connect headset, whatever headset you can be using, and then you'll be able to play your game, or the type that you can use with mobile. I think it's possible with mobile, and then you're able to do whatever you want to do with your Oculus Connect, and you're able to shoot, play game, whatever. It's cool. It's always fun, honestly, to buy these devices, play games, and try out some things. Top metaverse games include Tamadosh, Decentraland, Sandbox, Axie Infinity, and many more. There are plenty. Even Infinity Angels and more. All these are metaverse games. The next one here is talking about DAO and traditional organizations. A DAO, or decentralized autonomous organization, is a community-led entity with no central authority. It is fully autonomous and transparent. So smart contract lay the foundation rules, execute the agreed upon decision at any point. Proposals, voting, and even the very code conduct itself is publicly audited on a DAO. So in a centralized organization, you can see the pyramid scheme that is in a centralized organization. For example, Chaindustry is a centralized organization where we have the CEO, top management, mid-level, taking centralized decisions. And for DAO, there is no centralized structure in it at all. So there is nobody at the top taking out big decisions. So your decision is based on the amount of token that you hold. Miners also have their decisions to make, developers have decisions to make, exchanges have decisions to make, everybody has decisions to make in that ecosystem. So there is no centralized legal entity nor employment contract. So you can just come in at any time, do your thing, operate on the ecosystem, and boom, off you go. So that is what happens on DAO, and DAO is more of what to disrupt decentralized organizations like this, so that this can operate very much efficiently, because this tends to last longer. The organization is not singled out to one single point of failure, whereby if anything happens at the top management level, it could disrupt the whole organization down here. But in decentralized organization, if this developer is out, we could easily replace, or we could depend on this other developer or this other developer which is here and at the same ranking. So these are stuff that happen in DAOs, but traditional organizations are not the same. So DAO makes money by token issuance, where the protocol sells token. So they make money by selling their token to raise funds. So if you want to access power in DAOs, you have to buy tokens. So that helps them to raise funds and further the DAO treasury. So the token holders are offered numerous voting rights here, based on their holdings in returns for their fiat. So top 5 DAO projects to look out for in 2022 include Aave, one of the best DAO of 2022, MakerDAO project built on Ethereum blockchain, Curve DAO project designed to swap between similar ERC20 tokens. So also, primarily they have other stable coins on DAO operating in this what's it called, Curve DAO ecosystem. We have Uniswap, we have Lido Finance, and more. All these are decentralized autonomous organization. So the centralized autonomous organization centralized organization or traditional organizations are the ones we already know, that the structures that happens in companies like Facebook, Chaindustry, Snapchat, and many others that you can think about. So the next topic here is on 3.6, how Web 3.0 would disrupt software industries in future. There are many ways that Web 3.0 will disrupt software industries in the future. Analysis has shown that trust rate for centralized organization has been reducing currently, and it's currently below 50%. So Web 3.0 has brought a fundamental change to the internet, which strongly emphasized that consumer privacy, an issue that existed for a long time but was not adequately addressed. So Web 3.0 has brought a fundamental change, and that is going to solve that consumer privacy. A lot of people used to complain about their privacy, how Facebook can do this, do that, how Google tracks wherever you go, and all those things. But Web 3.0 makes that data decentralized and protected. Anonymity comes in where they don't even know who that person is. You don't need to do KYC. You have to be protected. You have to be covered. Your privacy is okay for you. So users were fighting back for their privacy where they don't have to be monitored at Facebook or Google and all those things. And then that is one of the advantages of the power that Web 3.0 is giving back to its people, where they don't have to be controlled by central authorities that are monitoring them or tracking them everywhere. So Web 2.0 features the internet as a platform to build applications, but Web 3.0 features the internet on blockchain technology. So when you think of blockchain technology, think of Web 3.0. When you think of the normal internet that we use, including social media, which is a product of Web 2.0, think of Web 2.0. So storing consumer data on the blockchain tends to decentralize the data. All this data that Facebook is centralizing on their server, Google is centralizing on their server, is thereby decentralized and making the use of data by companies more transparent. So whatever those companies use those data for, the whatever AI they use it to build, will now be transparent, assuming it was on blockchain technology, and also protecting it from vulnerable breaches if it is stored on blockchain technology. So moreover, the data is returned back to the consumer when it is stored on blockchain technology. You will be able to access, especially if it is a public blockchain, which might potentially disrupt the tech industry. Yes, it has the power. Web 3.0 has the power to develop Web 2.0, as many tech giants will lose access to the data, which gave them a game points in the competition. So there are many features of blockchain which are considered to be highly advanced technology, which include the virtual reality, augmented reality, artificial intelligence, and also machine learning, which contribute to the major advancement of this technology. So all these all these parts of technology which are contributing to blockchain technology and making it look more efficient is one of the things that would help to disrupt Web 2.0. It will affect software industries that are depending on Web 2.0. So a smart thing for these software industries to do is to shift according to the trend. There is a saying, if you can't beat them, join them. So they should find a way to integrate Web 3.0 features into their ecosystem to make it last longer and survive for the next generation. So lecture 3.7 is talking about the use cases of blockchain technology. There are a lot of use cases of blockchain technology, lots. I was able to coin out the ones I'm able to find and the ones I've experienced myself. Money transfer, I've experienced that. Smart contracts, experienced that. Education, experienced that a lot. Internet of things, experienced that. Personal identity, security, I've not experienced that, but I think it's also the but I've experienced this one of the most in one of my projects at candaweather.org. Candaweather.org is one of my projects, which we use IoT devices like this to send weather data from ground to Telos blockchain, which I am currently a block producer on as Candaweather. So with that, we are able to send data to the blockchain, and this blockchain we are able to mine rewards for sending data to the blockchain. We also send our data to Helium blockchain, and with this we are also able to mine rewards out of Helium. So healthcare is applied, blockchain technology is applied in healthcare projects like DeVita and many other health projects which are out there, makes use of blockchain technology. Logistics, non-fungible tokens, NFTs, entertainment, it's applied in the government. Remember we talked about voting, and a lot of voting used to happen in government organization, digital media, real estate, and many more. So there are a lot of use cases of blockchain technology which you should look out for. They are out there on the internet, and it is open and decentralized, easy for all of us to use. So I think this brings us to the end of lecture 3. I'll see you over in lecture 4. Bye for now.